Hey guys, welcome to the Driven Not Given podcast. And today we're going to talk about some of the things that are happening with the banking systems. Is a banking system vulnerable, right? We saw what just happened with SVB Bank, so let's get into it. All right, so let's talk about the failure of this bank. And by the way, I think they're getting bailed out. So there's a lot of things a lot of news that's unfolding right now. But for people that are, listening to this information and want to pay attention to business, right? I know a lot of you guys that watch my channel are entrepreneurs, and being up to date on things like this is important. So I did a little bit of homework. I watched some videos, and this has been all over the news, all over social media. But so Silicon Valley Bank recently just collapsed, right? And I'm going to get into the reasons why that happened. I'm also going to get into some of the things that I personally, I'm not a financial advisor. I don't play one on TV. I don't play one on YouTube. So I'm not giving you financial advice. I want to make sure that we got that clear, right? I'm going to simply give my take, and I'm going to give some of the things that I do that if you like them, you can do them. If you don't, I'm not a financial advisor. So now that we got that out the way. So let's read a little bit here. The recent failure of Silicon Valley Bank, which is the largest bank failure since the Great Recession. So Silicon Valley Bank is a prominent lender that caters mostly to venture capital and startup companies, okay? Banks operate on fractional reserves, which means that they keep at least 10% of their customers' money available at all times for withdrawals. So in 2021 and 2022, SVB, what they did is that they put roughly $100 billion into government-backed bonds with a significant portion locked up for 3 to 4 years. Now, here's a problem. They didn't anticipate because the rate of return for them was going to be about 1.79%. But here's what they didn't anticipate. They didn't anticipate that the Federal Reserve was going to raise the rates as fast as they did. So they took a big gamble in doing that, and it bit them in the butt, right? So they didn't anticipate that, and as a result, what happened? A lot of the customers were saying, hey man, I got to get my money out. So they rushed to the bank to get their money out, and they couldn't take their money out but see, here's the deal. That's not just the case with that bank. That's the case with any bank. If you go to any bank, we're in America. So if you go to Bank of America, if you go to Chase, if you go to Wells Fargo, and the majority of the customers that have their money in the bank go to the bank and try to withdraw their money, guess what? They're not going to be able to. The bank does not have the money to give you that withdrawal. What's interesting is that a couple of months ago, I go to the bank and I make $10,000, $12,000 deposit, right? Cash deposit. Actually, no, that's what I did, but it was like 9,000 and change. And then I went another day and I deposited another $3,000-4,000. It was a total of about 12 grand. When I'm depositing the money into the bank, they never ask me for that much. They asked me for my ID to, put my code in with my card. Give me your money, there you go. About a month later, I go back to withdraw $5,000 in cash. I needed cash, right? So I go to, I don't carry a whole lot of cash these days, but this particular day I needed some cash. So I go to withdraw $5,000 or $6,000 worth of cash. They're asking me for my ID. They're asking me to enter my card. They're asking me to send me a code to my phone, through the app on the bank's app, and to verify a code. And I tell the teller, I say, hey, you guys don't ask me nearly as much questions or make me jump through nearly as many hoops when I'm trying to deposit some money into the bank. But when I want to withdraw my money that you're making money on, you want to make me jump through all those hoops. And she apologizes, I'm sorry and I get it. She's an employee there. But it's interesting. It's an interesting dynamic, right? But the point is, all these customers, they couldn't take their money out. Now, granted, there's a FDIC insured up to $250,000. I personally don't agree with the $250,000 because you've got these big businesses that have payroll, they have all these other expenses. I think the limit should be higher than $250,000, right? At least it should be maybe an average of the average account held there or a percentage of what they're holding. But anyways, that's another subject for another day, right? Now, what's happening with this bank right now too is affecting a lot of companies. For example, being in the solar industry, one of the finance companies that I work with, Sunlight Financial, they had a lot of money with SVB. Now, I think they're in the clear. I think they were able to withdraw their money, or they seem to be okay. But for a couple of days, we were like, whoa, we've got a bunch of loans with this bank. What's going to happen, right? But as a result, the way it works and this is affecting different industries in many different ways. I don't know how it's affecting all these other industries, but I will tell you one of the ways it's affecting just not only what's happening with SVB Bank, but just, with the rates going up and everything happening in the financial world. But when this happened, that particular bank, normally what they do is we sell a solar system. The bank advances some money to the company first. So our reps get paid an upfront commission. Then the rest of the commission is paid after the job is installed and paid in full. Well, the bank says that they're in a position right now where they can't do the advances. They could do after the job is installed, paid in full. So now, naturally, what's interesting is that on the week that this happened, on Friday, I go out there and I close a deal for one of my new guys, right? Close a deal. And on Saturday, he's got 2 more appointments and I close. So we closed 3 deals for this particular guy on a Friday and a Saturday. This news hits Sunday, right? So when this news hits Sunday is when the bank says, we're not doing what they call M1s. M1s is the first commission. They advance you a percentage of your commission. I didn't really mind. I said, hey, that's fine. When the job gets installed, I'm going to just get a bigger chunk of money then, a couple $1,000s more on each one of these installs, which is cool. What happens, however, is that the new guys, obviously, most of the time, they're not in a position where they can wait. They need the upfront money, or they're counting on that upfront money. So it's affecting the solar industry in that way. Now, I personally use 4 different finance companies. 2 finance companies decided we're not doing M1s anymore. The other 2 say we're still doing M1s, we're strong, we're good to go. So naturally, the majority of people are using the other 2 finance companies. That's why it's good to have options, right? But my point is, it's affecting the solar industry as well. Just like, look how it's affecting the real estate industry. Real estate, and I'm not saying that what happened with Silicon Valley Bank is what's affecting the, I'm talking about in general, what's happening right now in the financial world, right? Interest rates, inflation, right? Everything that's happening. Real estate agents are hurting, right? So how can we protect ourselves against things like that? Well, before I get into a couple of things that I do to protect myself, right? Which again, is not advice. What happened with Silicon Valley Bank reminds me of a quote by Henry Ford. I'm going to read it for you right now. Remember, most banks, they don't have your money in hand. Most of the money, I'd say over 95% of the money is just digital. It's not physical. It's digital. So if everybody goes to the bank, the banking system will fail right away. Here's a famous quote by Henry Ford. It says, "It is well enough that people of the nation do not understand our banking and monetary system. For if they did, I believe there would be a revolution before tomorrow morning." If people really understood the way the banking system works, there would be a revolution, not only the banking system, in my opinion, the medical system and all kinds of stuff, the political system, but that's a whole nother subject. That's another episode that I'm not going to get into today. So let's talk about some of the things that I personally, again, not financial advice, because I'm not a financial advisor, some of the things that I personally would do to protect myself against things like this. Okay, so number 1, you want to diversify your holdings, right? I'm talking to myself. JC, you want to diversify your holdings, because I say you, right? I'm talking to myself, right? Because I don't give financial advice, right? So rather than putting all your money in one bank, I have multiple bank accounts. I have different businesses and I have multiple different bank accounts. Luckily, I didn't have any money with SVB, right? And if I did, though, all of my money wouldn't be there. I personally like to diversify in different investments, right? So I hold crypto, I hold silver and gold, and I hold some stocks, right? Even though right now I'm very light on stocks, right? Real estate, but also just simply having my money in different places, especially when we're talking about large quantities of money, right? The next one, I'm gonna read it to you here because I wrote these down. You wanna stay informed. You wanna stay up to date with news and developments on the banking industry and those things that you're interested in. For example, I'm very much interested in the crypto world. I have a couple of YouTube channels that I like and trust, some people that are a lot more knowledgeable than I am, and they keep me up to date when it comes to crypto investing, right? When it comes to holding crypto and whatnot. I like to stay up to date. One of the things that I say very often is, Stop keeping up with the Kardashians and start keeping up with your finances. Start keeping up with your personal development. Start keeping up with news on these investments. So I'll give you an example. There's a YouTube channel that I follow, and they were mentioning about how when Bitcoin was around 50,000, because it hit all the way up to 60,000 before it went down. When it was at around 50,000, some people were saying it's going to go to 100,000. I believed that for a while. And then somebody says, no, we're getting, in my opinion, we're getting towards the end of this bull run, and it's going to be a bear run soon, and it's time to sell. So I did it. It went up to 60,000. And then as it was going down right around 49 or 50,000, I sold a bunch of my crypto because I said, hey, I believe that it is time for that bear run, and I think Bitcoin's probably going to lose 50% of its all-time high. Well, it lost a lot more than that. It went, I sold it in the 40s, let's say. Crypto went all the way down to about 16,000 and some change. As I'm brushing my teeth, right, and doing my thing, getting ready for my day, months later, probably over a year later, I'm listening to this information again because I know where the price is and I'm listening to these experts. I didn't realize that Bitcoin had hit $16,000. On a particular account, I won't say how much, but let's just say thousands of dollars in a particular account in USDT. The guy says the fact that Bitcoin is at under 17,000, it's a great time to buy crypto. This is what the guy says. I am brushing my teeth and I stop and say, wait a minute. Bitcoin is under 17,000. I thought it was around 20. So I was actually ready to buy at 20. I was just kind of procrastinating. I was ready to buy some more, right? So I check, and sure enough, 16,000, I don't know how much, 16,000 and change, maybe 16,700 or so. Immediately I get on my account and I buy thousands of dollars worth of Bitcoin, Ethereum, and XRP. When I look back about two months later, maybe 3 months later, I was up like 40%, 30 to 40% on my account, right? But that is not where I hold all of my money. Crypto is not where I hold all of my money. I have a little bit of silver at home, but then I also have an account, right? I have a place where I buy silver, and then there's a place where I could store silver. So I like to store silver at this place, and you pay a membership for it and whatnot, and it's safe because I don't recommend that you really store a lot of silver or gold at your home, right? For obvious reasons. But the point is, I like to diversify. So one of the advice that I would give myself on this video is to diversify. And of course, to get to the point where you're able to diversify and spread the money out, and this is a good problem to have, you got to make sure that you get your money right, man. You got to make sure that you get some skills, right? So you could earn more money, right? So that way you could have the options and have to worry about, hey, I've got too much money exposed here. Let me go ahead and diversify, right? So anyways, let's go to the next one. Another tip that I give myself is this. You want to have cash reserves. Cash is king. One of the things that we're hearing a lot about right now, we're hearing a whole lot about this, is this. The World Economic Forum keeps talking about that there's a potential risk against the economic system, that it could be a virtual attack. Listen, man, they were saying the same thing about a pandemic before the pandemic happened. In my opinion, it's programming, is mentally preparing people, right, subconsciously of what's going to happen. There's two things that I keep hearing them say: an attack on the financial system and an attack on the energy grid. I believe that you should have some cash reserves, right? Whatever that number is for you, to have that money reserved, have it in a safe, have it in a shoebox or something, but you should have some cash at hand. And I think that these days, not a lot of people, hardly anybody, really has cash reserves. So if they don't have access to their money in the bank, they're not in a good position. And this happened a couple of years ago in Cyprus. People's money was worthless. That also goes to the point that I made last, which was what? Diversify. I don't have all of my money in US dollars, right? I've got it in cryptocurrency. I've got it in silver and gold, in real estate and in different things. So, but you also want to have some liquid cash. You want to have some cash reserves. JC, you want to have some cash reserves. Again, I'm giving this advice to myself. The next one that I'm going to say, which is a safe one and which should go without saying, right, I think, is you want to use trusted professionals. So seek out the financial advisors, the accountants, the attorneys that can provide the guidance and advise you on on protecting your finances. I'm a firm believer in life insurance, right? Term and IUL, right? putting your money away and things like that. I'm not a financial advisor. I do have financial advisors that help me and give me the advice. I say, look, here's my situation. Look at my finances. Tell me where I should put some money into so I can put that money into and so I can have that protection in case something happens to me for my family, right? So this is a little bit different of what we were talking about, but nevertheless, it's still finances. So those would be some tips that I would give myself if I didn't know this information. All right, to close this out here, I want to read this last part to you, which my attorney would want me to read to you, which is this. Keep in mind that the best strategies for protecting yourself against the banking system failures will depend on your individual financial situation and goals. It's important to do your own research, seek out professional advice, and make informed decisions based on your own needs and circumstances. As I mentioned before, I'm not a financial advisor. I'm talking to myself here. I'm simply talking about the news, some of the things that are happening. And here's the deal. In closing, I believe that we haven't seen the end of it. I think we still got a couple of rough years to go, right? But people that are better prepared are obviously going to do better. And in times of crisis, I think it was a quote by Warren Buffett. He says, when people are greedy, you want to be scared. And when people are scared, you want to be greedy. I think that the real estate market is going to come down. So in one of my videos earlier, I mentioned about getting ready. Get your credit intact. Make sure that your credit is in good standing, which, by the way, make sure you guys subscribe to this video, okay? Make sure you guys like and comment it. But this video is also sponsored by Credit Brokers, which is my credit repair company. So make sure that your credit is intact because guess what? I believe that in 2024, there's going to be some great real estate opportunities. I'm ready for when those real estate opportunities come to go out there and buy some property, right? Put some down payments down, get a couple of 4 units, and I'm going to buy them as rentals. I don't think that right now is the best time to buy them. In my opinion, I'm of the belief that I'll rather buy a cheaper property with a higher interest because eventually the property value will go up and I'll be able to, and interest rates will go down and I can go ahead and refinance and I owe less on that particular property. Now, your real estate agent is not going to tell you that because they want to sell you a house any time of the market because that's how they make their money, and I'm not knocking them. I'm simply giving my advice because I've got a lot of friends that are real estate agents, right? But you want to be ready because I believe that even though we've got some tough times coming ahead, there's also going to be a lot of opportunities coming ahead for those people that are prepared. So anyways, again, make sure you guys like, comment, and subscribe to this channel. Share it with a couple of friends. And with that being said, appreciate you guys stopping by, and I'll see you guys at the top or from the top. Take care.